So far, it looks like this boost to infrastructure spending is not going far enough to empower people to feel confident enough about their jobs and income and to get them to go out and spend their money in a meaningful way. So what sort of more specific targeted measures do you think we could see or we should see from the policymakers?
I'm waiting to be, surprised in a good way. I think the data, like the few data you named, would come in this week. I would expect they are moderate, in line with the PPI we see and CPI we see, show some more weakness. I hope this is a wake-up call for policymakers in China to spend more money into the industry. They could let controlled from the central level to provide more fundings for the quality developers to start building, for instance, public housing. They made a target, a Chinese policymaker made a target at their 14th five-year plan to say they need 8.7 million, public housing for this period that lasts until 2025. Thus far, they built 3.3 million. They still own 5.4 million units of public housing. That's continued to happen, that has to happen to meet their target. They could easily to introduce fairer policies for developers, quality developers, to kick that off. That can easily create jobs, that can easily translate to good data results for the next quarter. I think it's more of a wake-up call for the policymakers to realize the momentum is not enough to boost the economy from here.
Xiaolin, is there then a valuation opportunity perhaps in select property developers, or are they all equally vulnerable in this current cycle?
I couldn't agree more. The valuation there for some of the quality players in China in domestic, economy and equities are there. They very much lower valued compared to their histories, their mediums, their revenues, even compared to the revenue they have generated during pandemic and post-pandemic. There's definitely value to be picked up in Chinese equity for certain. And further on that is still a bit of a global, active managers pessimistics on China's equity as a whole. So you see very, low allocations to Chinese equity across. So this is absolutely not a crowded trade. Valuation is there, and everyone is waiting for the momentum. I do think the policymaker in China will do the right thing to boost the economy continuously from here to achieve their set target of 5% return for this year. And that actually could mean a meaningful upside for Chinese equity markets from here.